quick, smart, and disciplined.
When you increase liabilities, it's a debit to liabilities. Let's say $10. Cash?
Writing off the top of his head, it was incredible. I'm just sometimes sitting there in awe.
Oh, zero margin. Of course, of course it's going to be zero.
I'm probably smarter than you, so it's okay.
Jeremy, you talk about transparency. When did you let everybody know you're being paid every month by whatever stock was trying to have you pump and dump? Not gonna lie, guys, he's a lot more value-oriented than he portrays on the channel.
I am very lucky to have that guy in my life.
Oh, baby, it started, and it ain't gonna stop everything, money. You made a big mistake. Anyway, welcome back to Strongman Personal Finance. We're going to do a very short video because I have 2 more videos to do tonight, but I had to start late because I had to go to a parade, a Christmas parade. It wasn't bad. Anyway, I saw a question about Alibaba PE. Alibaba apparently has a very high price to earnings ratio. How do you calculate the price to earnings ratio? It's the price of the stock divided by the trailing 12 months earnings per share. Or you can take the market capitalization of the company divided by the last 12 months of net income. That's the price to earnings ratio. So people, they get really obsessed with PE. They're like, oh my God, the lower the PE, the better. Well, let me tell you what, ladies and gentlemen, there can be many reasons why a company has a low price to earnings ratio or a high price to earnings ratio. It doesn't mean it's a good buy or a bad buy because of the price to earnings ratio, because investments are forward looking. Now, let's say a company has a bad couple of quarters, right? Well, that's going to artificially lower the earnings per share. So you'll probably have a much higher PE ratio if the stock price roughly stays the same. However, if investors are looking into the future and they're saying, well, the future earnings of this company, which I'm going to get as an investor, and I don't want to hear about Bob, okay? Oh, you don't really own the stock. I don't want to hear that right now, okay? We're just talking about the basics. If you're buying for future earnings, okay, and the future earnings are massive, the PE doesn't matter whatsoever. I'm going to show you exactly why Baba's PE is so high, okay? Number one, their earnings have taken a massive hit, but Baba also has a bunch of investments. And when it comes to the accounting for those investments, if you have an equity method investment, this is accounting. I know it's boring, but it's important. And Berkshire Hathaway has this problem too. If you have an equity method investment, or if you even have trading securities, if you have trading securities and the stock goes down in price, let's say a company owns part of another company and they're classified as trading securities. If the stock of that company that they own goes down, they have to record that as a loss on their income statement, even though it's not a real loss, okay? It just, the stock went down temporarily. If you own a certain percentage of a business and you have significant influence, then you use what's called the equity method of accounting. If a company has a profit, that's income on the parent company's, the owner's financial statements. If you have a loss, that's a write-down. That's a loss on the income statement. Berkshire Hathaway has the same problem. You look at Berkshire Hathaway's earnings, right? They have a core business. They have core businesses. And then they have equity method or even trading securities investments, because Berkshire Hathaway invests in different companies. I don't know if you guys knew that. Apple, my Snapple. But when Apple's stock price, let's say Apple's stock price goes down, on Berkshire Hathaway's income statement, they have to record that as a loss because Apple's stock price went down. But what happened? Nothing. The stock price went down. But if they're a long-term investor, it doesn't freaking matter, okay? So let's go look at Baba's PE by one of the most reliable most reliable sources of financial information, Robinhood. So as we can see on Robinhood, I'm down 33% on Baba. I will never recover my money. I'm just done forever. I'm a fool. I'm a moron, okay? Look at the price to earnings ratio, 220. Baba's PE is higher than Tesla's. Let's go look. Tesla. What is Tesla's PE? I like how Tesla's just down, baby. It's going down. Yeah, Baba's PE is like almost 4 times as large as Tesla. So what's a better buy? A massively undervalued, in my opinion, large cap giant, e-commerce giant in China, or a massively overvalued tech company, or no, not a tech company, a massively overvalued, hyped up car company. Well, if you just look at the PE, oh, well, of course, Tesla's cheaper, bro. Tesla's the future. But if we go look at Baba's earnings, right? Okay, recently they've been absolutely wrecked. Here's the net income for Baba. Last quarter, -20. And this is in Chinese currency. I hate when they do that on these websites. Just give me the freaking dollars. -20, +22, -8, +20. So for the last couple of quarters, if you average that out, your earnings over the last 12 months are going to be insanely low. Now, let's do a quick calculation, okay? Let's look at the last 4 quarters of earnings per share. We're going to add them up right now, and we're going to test my math skills here, okay? -7.7 plus 8.56 minus 3.25, 3.28 plus 7.6. So their trailing 12 months earnings per share is 5.12. Hopefully I did the math right. If I didn't, you can sue me, okay? And the stock price is $90. So you take 90 divided by 5.12, and according to this, the PE ratio is 17. I have no idea why. But the trailing earnings are so freaking low. Oh, it's in Chinese currency. Duh. Yeah, that's why. It's in Chinese currency. I hate that. The earnings, we would probably have to adapt that. What is the conversion rate? Hold on a second. CNY to USD. So that number would have to be divided by 0.14. What was it? Let's do that again real quick. I hate the freaking Chinese currency. I don't know why they can't have everything in dollars on here. Maybe because it's free. Plus 8.56 minus 3.28, 7.6 divided by 0.14. Okay. So, yeah. So the earnings, times 0.14. So if you look at it from an earnings perspective, they really haven't made anything in US dollars, okay? So you take the stop price, boom. Here it says the PE is 126. But you can see here the earnings per share is extremely low because the last 4 quarters, their earnings have been absolutely garbage, mostly because of their equity method investments. Now, this wasn't the best example because it's in Chinese currency units, so the conversions, it doesn't work necessarily like that. But at the end of the day, they're taking the stock price, $90, divided by the earnings per share, which is in Chinese currency units. You convert that to USD, those earnings are a lot lower. And that's why you have a price to earnings ratio that is insanely freaking large, okay? But if you look in the future, if their earnings are great, and I don't know what Baba's forward PE is, but it's probably pretty freaking good. I've seen like quotes of like 10 or less. It's actually not that bad, okay? So at the end of the day, the whole point of this is you don't need to look at PE ratio, okay? If you want to look at a PE ratio, maybe look at a forward PE ratio or something like that. Don't worry about price to earnings right now. Honestly, it's meaningless. It's absolutely meaningless because you could have, let's say Baba had like 3 killer quarters, right? But in that last quarter, they had a massive accounting write down. Let's say they had to impair something. Well, if you had a massive negative number here, and then you had positive numbers here, if that negative number was greater than all the positive numbers, you wouldn't even have a PE ratio because you would have negative earnings per share over the last 12 months. Does that make sense? The PE ratio doesn't freaking matter. Now, if you want to calculate it yourself, I would pay for software. I wouldn't say everything monies, but here, you got to convert it from Chinese currency units and blah, 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 blah. But you can go on any reputable website that provides, accurate data, because this is also inaccurate sometimes. And you can calculate your own price to earnings ratio, but you have to dig a little bit deeper than saying, oh, the PE is very high. That's bad. Or the PE is low. That's very good. Because you could have a low PE, right? You could have a company that had amazing earnings over the last 4 quarters. And the stock price is priced in for the future earnings being garbage. So you could have a PE of like 2 or 1. You could be like, wow, the PE is so low. It must be cheap. But if you're looking at the PE ratio, you're looking at the last 4 quarters that are in the past. But if the future earnings are garbage, you might not do so well, okay? So that's the example here. Okay, so Paul thinks Jeremy's a value investor and that Mr. VT. Oh God, we'll get to Paul. Don't worry. Are you the villain from Home Alone? It's starting to get cold in here. If it's true, Baba has a high PE, but what about the PE of the PEE of the PP? Strongman, you're dumb. It's obviously the earnings to price ratio. I want to see those. You're not gonna see these nips for a while. PE means nothing. It's not a. You have to look into why the PE is high or low. Okay, you have to look in that. Even Tesla, when they had a super high PE, is probably because they had a ton of losses, the last couple quarters that you were looking at it, but their forward earnings were way, way, way better. But if you just looked at the PE ratio, you'd be like, holy freaking crap. PE is 1,200. That's crazy. Well, you have one bad quarter, it distorts the PE because it's about past earnings. Let's see. You cold, bro, your nips hard. Strongman, use the ticker terminal. They have currency conversion. Yeah, it's a pain. Sometimes I'll do the math and I'll be like, what is going on here? I did the math for Baba's PE. I was like, that's wrong. You got to be careful with the currency. It's a freaking pain. You showed mercy to Everything Money, one of the only channels you respected. I was nice to them, and how do they return the favor? He's not wearing a shirt. Oh, but if I say look at Tesla's annualized PE or the forward PE, well, you are a Tesla shill. I mean, we're not going to deny that, okay? I still think that company's massively overvalued because it's about future earnings. But we'll see. We'll see. Do you think the average PE of the stock market lost its value as a technical indicator? I mean, I don't care about technical indicators. Dollar cost average and index funds. I don't really care. What is their debt to free cash flow? I don't know. I haven't checked recently. Hi, I'm Paul. I'm a value investor. Will Pokemon cards make me rich? No. You and Nagi said TE's pest PE was insane. I mean, that is an insane price to earnings ratio. I mean, all things considered, that is pretty insane. Now, Tesla has done well. I'm not going to deny that. But I still don't buy I don't buy the story. I don't buy the story that they're going to grow revenue at 50% perpetually into the future. I don't see it. That's my criticism of Tesla. But you can think whatever you want, buddy, okay? Well, that's it. We're going to move on to the next video. Talk to you later. Cheers.